Nikola's goals have caused it to be compared with Tesla, but there are some key differences between the two. We asked RBC Capital Markets analyst Joseph Spak what exactly Nikola is trying to do.
Nikola is, a little bit, I think, of a misunderstood story. There's definitely a lot of noise around the name. I think the short report brought out a lot of issues, which, I'm certainly not going to defend here. But I think that when you look at the crux of what Nikola was trying to do, they were trying to bring together a whole bunch of partners from the manufacturing side, from the fuel cell and battery side, and from the infrastructure side to be able to offer their customers a point A to B route that they can take over for them, make green and efficient with hydrogen fueling technology, and be able to offer a fuel cell lease. Now, if you can build out a whole bunch of A to B back and forth routes where you can get customers to sign up for that, slowly but surely, you can build out efficiently a hydrogen charging infrastructure network. And that helps solve the chicken and egg problem that exists with hydrogen. But clearly, some of the issues that have been brought up and now the cloud that surrounds the company, I think is putting some of these partnerships and potentially customers at risk. And it does mean that the whole idea or concept can fall apart.
So as I understand it, Joseph, what you're saying is what is really unique or particularly valuable to Nikola, insofar as it is actually the business model, a way of approaching it, rather than some particular piece of intellectual property. It's quite different from Tesla, for example, it sounds like.
In our view, I agree with your statement that this is sort of more of a business model innovation. It is completely different from Tesla, which is the most vertically integrated original equipment manufacturer on the light vehicle side, or certainly on the commercial vehicle side in the world. And I think because of the alternative propulsion, the electric vehicle sort of comparison, a lot of investors wanted to make that direct comparison to Tesla.
So as a practical matter, is it the case that the Hindenburg research report, insofar as it said you really are a licensee and a packager rather than a vertically integrated company, even if it were true, we don't know if that's true or not, wouldn't necessarily be an indictment of Nikola, because maybe they weren't trying to be more than that? As I understand it, often with large long-haul trucks, you have a lot of sub-licensees, you have a lot of packagers, and you license things from people and put it together.
I think your description of what Nikola is pretty apt. That may not be the way they portrayed themselves always to investors, which could be part of the problem here.
Do you think GM knew what they were buying? Because as you describe it, maybe they knew exactly what they were getting and what they were not getting.
I will say from GM's perspective, I think this has been a little bit misconceived or misperceived, I should say, by certain people and investors and sometimes in the financial media. There is this perception that General Motors invested in Nikola. It is true that General Motors now owns about 11% of the company, but really the financial risk that GM is placing here, I think, is pretty minimal. In my view, what happened here is GM got paid by Nikola, now granted in stock, in order for access to their capacity and to their technology. So little financial risk, obviously, if you're doing sort of some of the parts, the lower Nikola stock prices, sort of translates into, a lower value for General Motors. But, even at the price that it was, the deal was first struck, it was only about $2 for the GM share price. So we still see meaningful potential upside for General Motors. Now, that being said, I think there is clearly some reputational risk from this deal, and we'll need to see how that plays out.
Tesla had their battery day this week, and I think it's fair to say a lot of investors came away a little disappointed. Certainly were not as enthusiastic as they thought they were going to be. What happened there?
Yeah, I think this is an event that's been, over a year in the making. I think it was probably during the second quarter of 2019 that Elon sort of first teased having a battery day. So there's been a hype train building for a long time here, and I think it's a classic example of expectations being too high. Tesla definitely introduced some ambitious goals in terms of reducing the cost per kilowatt hour in batteries, and certainly in the expansion needed to fulfill not only Tesla's goals, but the industry's goals of electrifying the fleet. And that's going to require a ton of capital, not only, again, from Tesla, but also for the entire industry to make sure there is enough battery capacity to make sure the entire global fleet can become more electrified.
At the same time, he set some goals and some timetables for getting down the cost of batteries, getting up the range of batteries. Can there be substantial improvements in batteries, both on the cost side and on the range side, without some shift in technology? Can you do it by getting the existing technology to work better?
Yeah, I think that's what we've seen to date. If you look at sort of the cost curve of lithium-ion batteries, it's certainly come down. I think what Elon and the team at Tesla have indicated of late is that that curve is really sort of flattening out. I think there's easier gains in the beginning, clearly, when you start sort of getting a little bit scale. I think from here on out, you need some tweaking of the chemistry. Elon also sort of talked about some tweaking of the manufacturing process in order to, again, have that, battery costs come down by over 50% over 3 years.